Good morning, everyone, and welcome to Bank of Jamaica's quarterly monetary policy report press conference. Given that it is the first time for the year that we are meeting, allow me to wish you a happy 2021 and, importantly, a safe and healthy new year. Circumstances under which we now operate, this press conference is a virtual one, and so I thank you for your continued support in helping us to get on with the nation's business. We have with us this morning Governor Richard Biles, Senior Deputy Governor Dr. Wayne Robinson, and Deputy Governors Natalie Haynes and Maureen Sims. As is customary, Governor Biles will make his address and provide more insight into the bank's most recent monetary policy decision against the background of the economy's performance in the last quarter, our outlook for the current quarter, and our thoughts on inflation, all in the context of the current global pandemic. After the governor has made his address, the floor will be open to allow for the question and answer session. Governor Biles, over to you.
Good morning, ladies and gentlemen, and welcome to the quarterly monetary policy report press conference. Over the past 6 weeks, we have witnessed an uncomfortable rise in COVID-19 cases. First, among our main trading partners, and more recently here in Jamaica. This has led to tightened restrictions on international and local movements. At the same time, hope has emerged as vaccination programs are rolled out and the spike in new cases in North America moderated. These developments underscore Jamaica's continued vulnerabilities to the pandemic, but also an opportunity to break out of this recession. Against this backdrop, we are beginning to see signs of incremental improvement in economic activity. We have buoyant flows in the foreign exchange market, a sustainable balance of payments position, adequate reserves, and inflation is contained within the 4 to 6% corridor. Let me begin my remarks by outlining the most recent policy action taken by the bank. On Tuesday last, we announced our decision to maintain the policy rate of 0.5% per annum. This decision was based on our assessment that inflation will continue to trend within the bank's target of 4 to 6% over the next 2 years. The bank's accommodative policy posture is intended to support GDP growth and will remain so at least until there are signs that economic activity in Jamaica is returning to pre-COVID levels. Looking at inflation rate for the 12 months leading up to January of this year, as released by the Statistical Institute of Jamaica, 4.7%, within the bank's target range, and also below the 5.2% recorded for the previous month. Deceleration in inflation is mainly related to a dramatic fall in agricultural prices in January, following elevated prices in December of last year. Core inflation, which excludes increases in agriculture and fuel prices, for the 12 months leading up to January of this year, was generally stable at about 3.5%. Overall, the bank continues to be very successful in guiding inflation within the 4 to 6% target range. Over the past 36 months leading up to January of this year, inflation has been below 6%, the upper band, on 34 occasions, or 94% of the time. The main reason for inflation going above target on the 2 occasions was temporary increases in agricultural prices due to either droughts or floods. On the flip side, inflation fell below the lower end of the target on 13 occasions over the period, again, mainly due to volatility in agricultural prices, as well as declines in international oil prices. Going forward, Bank of Jamaica anticipates that annualized consumer prices will be as follows over the next 3 quarters. At March of this year, between 4 to 6%. At June of this year, between 4 and 5%. And at September, between 4.5% and 5.5%. This outlook is lower than the one I shared with you in November of last year, a change that is primarily related to the bank's updated view that agricultural price increases over this period will be smaller in the context of expected better weather conditions. Beyond this horizon, our forecast is for inflation to remain comfortably within the 4 to 6% range. The risk to inflation over the near term, which is the next year, are skewed to the downside, which means that inflation could be lower than we have highlighted here. Let me now briefly expand on my earlier comment that the economy is beginning to show signs of recovery, even though the future remains cloudy with much uncertainty. The most recent real GDP outturn published by Statin indicate that the domestic economic activity contracted by 10.7% for the September last year quarter. This is an improvement relative to the June 2020 quarter, when we saw a significant contraction of 18.4%. Another way to view this improvement is to consider the quarter-over-quarter change in deseasonalized real GDP. Again, this is reported by Statin. Using this measure, the economy declined by 15.3% in the June 2020 quarter relative to the previous quarter, but grew by 8.3% for the September quarter when compared to the June quarter. The same pattern of improvement is evident in the labor market. The latest data released by Statin indicates that an unemployment rate is 10.7% at October 2020, an improvement relative to the 12.6% recorded in July of 2020, but still up from the 7.2% recorded a year earlier. When account is taken for the seasonal patterns in employment, these statistics suggest that more than 40,000 jobs were restored in the December quarter, following the COVID-19 related loss of close to 100,000 jobs in the September quarter. Loan growth has remained fairly resilient, with stocks of private sector loans and advances recorded year-on-year growth of 11.5% at November 2020, compared to growth of 16.5% in February of 2020. So although the pace of growth in loans has moderated, it remains above what we had expected, given the context of the sharp fallout in economic activity, and is bolstered by continued demand for loans by businesses for working capital needs. While the domestic financial system has been impacted by the pandemic, it continues to remain resilient and sound. Deposit-taking institutions, their balance sheets indicate that they are well capitalized and in compliance with prudent liquidity standards. Loan quality for the system, while naturally showing a small deterioration, remains well above our threshold. Bank of Jamaica is, however, keeping a watchful eye on the resolution of a substantial block of loans on moratorium. The bank continues to take steps to ensure that the financial system remains adequately funded. You may recall that the bank had requested and received the commitment of the financial holding companies, generally the parent of the deposit-taking institutions, to make only limited dividend distributions in May 2020 in an effort to encourage the preservation of DTI capital in light of the pandemic. In December 2020, This understanding was further strengthened with the DTIs agreed not to declare or pay any dividend over the next 2 quarters until June of 2021. The parent financial holding companies may declare dividends. However, the payment will be limited to shareholders owning 1% or less of the outstanding shares in a financial holding company. Ladies and gentlemen, we believe the contraction in the Jamaican economy is past its worst, and the outlook is for continued, albeit more gradual improvements in economic activity. Notwithstanding this improvement, the bank continues to project that for the full 2021 fiscal year, real GDP will contract in a range of 10 to 12%. We further project that a partial rebound of at least 4% in economic activity will commence in 21-22 and could possibly be as high as 8% if there is a strong recovery in tourism. This projected growth in financial year 21-22 represents a first step in getting the economy back to levels of economic activity observed prior to the COVID pandemic.
We're on every other way.
I will now turn to developments in the foreign exchange market. At February 16, 2021, the exchange rate was 151.42 to $1, representing a depreciation of 6.1% for the calendar year to date. This pace of change is below the depreciation of 7.3% recorded over the same period last year, and is consistent with the usual seasonal pattern of flows in the market. From an exchange competitiveness point of view, Jamaican dollar has gained competitiveness on an average range of about 1.6% in 2020. From the perspective of our external accounts, notwithstanding the fallout in tourism flows, the current account deficit in the balance of payments is projected to deteriorate mildly from about 1.6% of GDP for financial year 2019-2020 to about 1.8 to 2.2% in financial year ending March this year. While the performance in the current account deficit remains exemplary, it must be viewed in the context of the low levels of economic activity. In particular, tourist arrivals fell dramatically over the year, and imports, some of it related to the tourism trade, also fell significantly. Importantly, however, we also saw a dramatic improvement in remittance inflows, which served to cushion the effects of the fallout in tourism. Private capital outflows were also tempered by a reduction in capital market foreign exchange investments. Overall, inflows into the foreign exchange market have remained healthy. Between March 2020 and January of this year, daily purchases of US dollars by authorized dealers and cameos from end users averaged 31.2 million, slightly lower than the average of 33.4 million recorded last year. Similarly, daily sales to end users averaged 27.7 million over March 2020 to January 2021, slightly lower than the average of 29 million. Where we identify temporary shortfalls in the market, we have intervened. Total BFIX flash sale operations since the onset of the crisis in March 2020 has amounted to $381 million. The bank has been judicious in its management of the country's reserves. At the 16th of February of this year, Jamaica's net international reserves remain healthy, amounting to just under $3 billion, and we believe these reserves to be quite adequate to see us through the crisis. Looking forward over the next 2 years, the bank projects that the current account deficit will remain sustainable at levels of about 2 to 4% of GDP. This is supported by expectations for a partial recovery in tourism arrivals, driven in large part by the successful phased vaccination programs in key source markets and our assumption of careful control of community spread in Jamaica. Ladies and gentlemen, these foreign exchange statistics, the gain in competitiveness of the Jamaican dollar, and the outlook of the external accounts is in fact an opportunity for stakeholders to devote attention to meaningful export-led growth and to accelerate the pace of import substitution. Let me conclude. The duration of the global pandemic and the prospects for the Jamaican economy continue to be uncertain. Notwithstanding, the macroeconomic outlook that we have presented today suggests that we may be past the worst, and the near-term outlook for the economy is for improvements in economic activity going forward. Bank of Jamaica will play its role in facilitating a sustainable economic recovery by maintaining its accommodative posture. Private sector also has a critical role to play by being proactive in seeking out opportunities to encourage increased economic activity as we work together to recover from this pandemic. Bank of Jamaica will remain focused on ensuring that inflation remains low, stable, and predictable within the target range of 4 to 6%, and will deploy additional measures as needed to ensure the continued smooth flow of liquidity to all participants in the financial system. Thank you.
Thank you, Governor. Ladies and gentlemen, the floor is now open for us to take your questions. Kindly use the raise your hand feature found at the bottom of the screen or send a message within this Zoom meeting. Go ahead, Mr. Medley. Is there anybody else who wishes to ask a question as we wait for Mr. Medley to connect? Or you could type in your message, your question, Mr. Medley. Okay, I have a question here from Chevron Campbell. Does the BOJ's projection take into consideration? I can't see it anymore.
Melanie, if I could help you with that question from Chevron Campbell.
Thank you.
Does the BOJ's projection take into consideration the announcement by the finance and health ministers of attempts to vaccinate 60% of population this year? If not, how does that affect your projection in terms of outlook for the next fiscal year?
Our projections, if I may, our projections were based on prior to the finance minister's announcement. So if anything, they are on the conservative side. If we do manage to achieve that target, it would be great, and it certainly would draw closer economic recovery compared to what we have projected now.
Thank you. I have another question from Keith Callister. Can you comment about how the Bank of Jamaica now pays dividends and the logic behind it and the history?
Right. So Bank of Jamaica didn't always make profits in the past. In fact, I believe as recent as 2017, made a significant loss. So on those occasions, it had no dividend to pay. It also was not as well capitalized back then as it is now. The new Bank of Jamaica Act passed in December has a regime that dictates how dividends are to be paid. So the capital to liabilities monetary ratio has to be at least 3%. That means we have to have at least 3% of all monetary liabilities as capital before, if it's less than that, the government has to recapitalize us. If it is 5% or more, we can pay dividends of 25% of distributable earnings. So there is a regime going forward. There is going to be a regime that dictates what the rate of dividend payment will be. And once we get to 8% of monetary liabilities, we'll pay out all our earnings in dividends. Below that, it's 25% of distributable earnings.
Thank you, Governor. We have a question from Douglas McIntosh. How advanced is the bank with plans for the development and implementation of a central bank digital currency framework?
Yes, we have spent the last couple of months doing all the preliminary work of assessment and getting the protocol of approval through the government process, getting that right. So we're hopefully going to cabinet for approval very shortly, and we'll start a pilot in the second quarter or third quarter of this year. That pilot will run for a couple of months, hopefully conclude by about the end of the year, this year, and we'll be able to launch the public digital currency in early 2022.
Thank you, Governor. Mr. Mark Gale, go ahead and ask your question.
Morning, Governor. So in your remarks, you mentioned the fact that you're expecting the short term inflation to be on the low end of the range. So what are the key factors that lead the BOJ to believe that inflation will be on the lower end as opposed to mid-range or the top end of the range?
Yes, so we are taking advice from the weather experts, and the expectation is that this year will be less severe in terms of weather conditions than last year was. And we believe that with that kind of background, agricultural prices should remain fairly stable and low. And as you know, agricultural prices are a major component of the CPI basket. So it's on that basis that we think the risk is for it to be lower rather than for it to be higher.
Thank you, Governor. Mr. Pate, would you like to ask a question? Mr. Durant Pate? Okay. Is there anyone else who would like to ask?
I am here now.
Okay, sorry.
Hello? Right,
ahead.
I was muted. Right, Governor, your recommendation during the pandemic was that listed companies withhold their dividend payment. I note that a recommendation was accepted that smaller shareholders they pay dividend. But how long do you foresee the central bank holding this recommendation not to pay a dividend, especially to large shareholders? Because many of them are complaining that they're reporting losses and need these dividends in order to prop up their financial resources.
But you know, Durant, the 1% shareholding covers, if I recall correctly, over 90%, maybe 94% of all shareholders. So I don't think that it's a broad-based complaint. But that aside, what we're really watching is all these loans that are on moratorium. We want to see how those get resolved in order to say, well, let's get back to business as usual. Because as you can expect, there is a significant set of loans that haven't been performing normally, that is making their regular payments. They have been on holidays, so to speak. We want to see how those get resolved. Do the institutions have to take provisions for some of them? If so, how much? What does that mean for their capital? So those are the issues that we are watching. And every month that we get the data from the banks, we look at it and we assess. To say what we have, if I could just finish, what we have seen is that from June of last year, the set of loans on moratorium have reduced. So for all the financial institutions, the block of those loans have become smaller and smaller, and that's a great sign. Yes, Durant.
Right, I was asking, I wasn't trying to butt in, Governor. But speaking about loans, I know that your monetary policy report is embargoed for 12 today. But could you speak to the level of credit quality, what it has been now, and what is the prospect for the future?
Well, what we see in the commercial bank reports to us is that the non-performing loans are slightly up, not terribly significant, and certainly well below the levels that would alarm us. But then, as I said before, there are those loans on moratorium that we don't know how they're going to get resolved. So on the face of it, when you look on a bank's balance sheet, the non-performing loans are well within the limits, good solid limits of prudence. We just are being careful about the loans on moratorium.
Thank you, Governor. We have another question from Keith Collister. Can you advise how many applicants there were to the sandbox and how many approvals given? In the UK, for example, the reasons for a rejection would be outlined transparently so applicants can improve their applications the second time around. Is Payment Innovations allowed as part of the sandbox? If not, can you advise if the correspondent banking issues are part of the decision not to include payments in FinTech Innovation?
Well, that question seems really tough. I have to call in my support force. Natalie and Marie, can you comment on that for me?
All right, let me kick off, Governor. Thank you for that question, Mr. Collister. The number of applicants in the sandbox to date is about 5, and we have about 2 persons who have entered. The other 3, it's not that they are rejected, it's just that they still have more documentation to present to us. And your other question, FinTech Innovation, yes, that's the purpose of the FinTech Regulatory Sandbox, to include all FinTech regulations by eligible entities. Have I answered your question, Mr. Collister?
Well, I'm sure he'll come back if you have.
Okay.
Thank you, DG Haynes. Mark Gale, you have another question?
Yeah, thanks, Melanie. Governor, how are electronic transfers, RTGS transfers, or just generally all electronic transfers and payments doing relative to, this year or the last quarter relative, year over year? I'm curious because last time in the last press conference, it was mentioned that the levels were more or less the same, which I found particularly odd, given that in-person transactions were lower due to restricted economic activity. So I'm wondering if the trend has held, or has there been an update on the data? Has there been more investigation and research into what's happening on that side, where electronic transfers would have increased as expected?
Let me ask Natalie again to address that.
Thanks again, Governor. Electronic transfers, and you mentioned the RTGS in particular, that has not fallen off since the pandemic. It has remained consistent. Recall the RTGS are for large value transfers, as well as there are smaller transfers on the RTGS, which are time critical payments. So we still see that being a significant part of the payments platform. So it has not fallen off. So the story remains the same.
For DG, has it increased by any chance?
No, not significantly, because as we would expect at this time, electronic payments to increase vis-a-vis currency, what you find is currency is still high relative to last year. And of course, various reasons for that. Tied back to the increase in remittance inflows. Most persons want their remittance payments, the recipients, in cash, as well as the remittance companies paying out under the government care program. So what that points to us is that there are a lot of unbanked persons still out there, and as part of the banks and the country's financial inclusion strategy, we are targeting such unbanked persons. Read central bank digital currency, among other things.
And what about card payments and other electronic non-RTGS transfers and payments?
Right. Those through the ACH platform, through the multi-link, those have not really fallen off.
And no major spike either?
No, not at all. Not at all.
All right, thank you, DJ.
You're welcome.
Thank you. Mr. Medley, you have a further question?
Okay, I was having some audio issues. Am I coming through clearly now?
Yes, sir.
Thank you. Two questions off the bat. I just wanted to be reminded, first of all, of the total J dollar and US dollar liquidity support that the BOJ has provided since the start of the pandemic in March last year. And is there a ceiling that is factored in? No one knows the duration of the pandemic, as the governor indicated. Is there an outlier range for liquidity support?
I'm going to ask Dr. Robinson if he's on to answer that.
Thanks. Yes, I'm here, Governor. Thanks very much. Thanks for that question. In terms of the US dollar liquidity support, since the start of the pandemic, we would have offered well over $1 billion US, or about 8.6% of GDP. For Jamaica dollar liquidity through various means, would have offered about 70 odd billion, or roughly 4% of GDP. I mean, we do not necessarily operate with a global ceiling. We monitor the current economic conditions and the prospects, and we tailor the liquidity needs and the flow of liquidity in the system accordingly. As it is now, we think that the level of liquidity in the system is sufficient to support the economy during this period.
Just to add that billion is not just us selling into the market. It would take other forms to, like swaps, as well as, although we sell into the market, we also buy from the market. So our net to the market will be a lesser number.
Thank you. And can I ask a related question? The bank has put out a consultation paper on the implementation of Basel III capital adequacy requirements. You also last year, about June, I believe, June or August, I don't remember the exact month, you had put out a framework document on macroprudential increasing capital adequacy requirements. Is there any indication? You have said that the banks are adequately, financial institutions are adequately capitalized. Are there any particular risk issues that are being thrown up by the pandemic that the BOJ is particularly keeping an eye on, which could have explained your accelerated macroprudential documentation since the start of the pandemic? And secondly, have you been too slow in moving towards the implementation of the additional requirements, particularly in relation to data reporting by interconnected financial institutions, to move towards a more stringent framework before the pandemic started?
Maureen,
Yes, thank you, Governor. All right, yeah, that's a lot to unpack in that question, Huntley. But to say the current framework, capital framework that Jamaica operates on for DTIs, that is deposit-taking entities under the BSA, is the Basel I capital framework. We committed some time ago to implement to go to the Basel III capital accord, and we are in line with doing that. The prudential toolkit under the financial stability uses the same framework to implement their macroprudential tools. So we took the opportunity to synchronize the consultation on both frameworks. Basel III looks at microprudential capital, or capital for microprudential supervision, while the macroprudential toolkits look at the kind of interventions that the Bank of Jamaica could or would make if it sees, for example, overheating in the economy. Those tools would be implemented through the regulators, that is on the microprudential side. So for example, if an assessment of credit in the system suggests that households, for example, are over indebted, a tool that the macroprudential side could use, for example, is a loan to value ratio. And that loan to value ratio would then get implemented through the supervision, the macroprudential supervision. So that's the link between the macroprudential ratios, or the macroprudential toolkit, and the microprudential capital framework. The capital items under the Basel III capital framework accommodates both sets of supervision, that is microprudential and macroprudential. Under the Basel I framework, capital framework, the capital for the financial system, entities are adequately capitalized. Under the Basel III framework, where the capital requirements are more risk related or more intensely related to the risks on the balance sheet and capital held against those risks, though the methodology for computing capital will be different. Hence, us sending out the consultation for the new framework. It will also involve us doing an impact study as to what the new capital requirements, what impact that may have on existing capital, whether you will need new capital, if you would need new capital injection, the time frame within which to do that. The Basel III framework also looks at liquidity. And in this regard, we brought forward the liquidity coverage ratio, that part of the capital framework that looks at liquidity. And we are proud to say that we implemented the liquidity coverage ratio a year ago with a transition period of a year. The minimum ratio is 100%. And during that transition period, we set that ratio at 75. And the timeline to meet the requirement was November 2020. I must say all institutions, all DTIs are currently meeting the liquidity coverage ratio. The liquidity coverage ratio is a part of the Basel III capital framework. I don't know if I've answered all your questions.
Maureen, I think he was asking about consolidated supervision also.
Okay, in terms of consolidated supervision and the collection of data, we are rolling out consolidated supervision on a phased basis. Late last year, the rules for licensing financial holding companies were passed in the parliament by both houses of parliament. And we are in the process now of licensing financial holding companies. We are doing that on a phased basis. Currently, we are processing our first application and we are on target to complete review of that particular application by the end of the first quarter. So by the end of the first quarter, we should complete that first licensing process. And we will continue to roll out the licensing of FHCs over the year. In terms of collection of data, we are collecting data now from the financial holding companies. And this was a part of the intensified monitoring that we have engaged with during this pandemic to get better information on all the groups. Going forward though, we will be collecting on a routine basis information on the entire group from the financial holding companies. And I must say at this point that the Bank of Jamaica, include the Bank of Jamaica in conjunction with the FSC, we are embarking on a project where the bank will collect information on the entire financial system, centralized collection data for the system. That project we hope will start later down in the year, but at the end of it, we should be able to be more efficient in terms of data collection and how we warehouse that information such that it is available to all the regulators and other stakeholders in policymaking.
Thank you. So in a nutshell, the reporting requirements are in line and in keeping with the risks that have been assessed as being possible during this pandemic. That's the crux of what I was getting at.
Yes, that's correct.
Thank you. I have about 2 more questions if I'm allowed to continue, or you want to take other questioners before you come back to me.
No, please go ahead.
Okay, Governor, the amended Bank of Jamaica Act it has been passed in the House, also received royal assent. The ministers indicated, Minister of Finance has indicated that it is to be effective in April. My understanding is that there are some staffing structural changes, possibly implications for compensation review as you get the bank organized internally for the extended responsibilities and greater independence. The Minister of Finance yesterday in the budget speech indicated that the overall and overarching public sector review will not be financed, will not be done because of competing priorities brought on by the pandemic. Does that affect your ability at the BOJ to prepare and be ready for the implementation of the BOJ Amendment Act in April? Or you have special dispensation for your staffing review and your compensation changes and improvements that need to be done?
So Huntley, the principal changes that will occur when the appointed date arrives is that we will have two new committees, very important, the Monetary Policy Committee, which will be charged with making all decisions to do with monetary policy. So as it stands now, I receive all of the recommendations and arguments, but it's eventually my signature that approves monetary policy. MPC will broaden or democratize that process, and it will call for independent persons, non-BOJ staff, to be on that committee, expert persons. And they will, together with myself and senior members of Bank of Jamaica, make those decisions. Those decisions will also eventually be made public by way of the minutes of the meeting. Secondly, there is a Financial Regulatory Committee, which will oversight all of the financial regulation supervisory process. And again, that will involve independent non-BOJ persons. And again, that is an attempt to democratize. As it stands now, I am the supervisor. But when we enact the FPC, it will be a process of collective decision. Also, the board of the bank will be broadened. It will have more independent persons on it. It will not have on it any member of the civil service or any other government-related enterprise. It will be purely senior Bank of Jamaica staff and independent persons from the community at large. They'll also have staggered tenures so that at no one point in time does the whole board retire. Okay, so apart from that, we have at Bank of Jamaica been practicing, if I could put it that way, independent central banking. A lot of our internal processes are based on what we expect we will have to do when we reach that appointed date. So that way, we are prepared internally to flip the switch and to go independent central bank. So I must say that the Bank of Jamaica has an awesome responsibility, and in executing that responsibility, we have to have awesome staff, and we do. And they have been, like many other persons in the civil service, been on the strictures of emoluments. Of course, because we understand the whole economic situation. So we look forward to the date when not only Bank of Jamaica, but the civil service in general can get an emolument improvement. And that is going to, of course, await generally the economic improvement of the country, or debt to GDP ratios, and so forth. But we do the best we can within the Bank of Jamaica to keep our very talented staff, and it is certainly a pleasure to work with them, and we're very grateful. I think the whole country is grateful that we have that quality of staff working for us.
Okay, thank you. And I think finally, is there any update on the credit unions special provisions act to bring credit unions fully under the regulatory ambit of the BOJ?
Great.
Okay, in terms of the credit union special act, that is still going through the process, still with the CPC and to be reviewed. So that we hope will get passed this year, but it is still in process.
Okay, all right. I did say finally, but I realize I have one other question that needed. Just to be reminded, in terms of the special liquidity arrangements put in place last year at the start of the pandemic, have any been relaxed or they are still fully in place as outlined last year?
Wait, you want to take that?
I mean, the facility itself is still in place, but we have not had or seen any need by any institution in the recent past to actually call on those facilities. But they are available, but this, the financial institutions, the banks are very much liquid. They have sufficient liquidity.
Okay. Thank you very much.
Okay. As there are no further questions, I'd like to thank everyone for joining us this morning, and I'd like to wish you all a good rest of your day. Thank you.